The E-mini had an incredible past 7 or 8 days, and on Friday it had a small doji bar after Thursday's big bull trend bar, and this is a buy climax within a buy climax. The bears had a reasonable chance, 75% chance, of transitioning the bull channel into a trading range, and the bulls only had a 25% chance of doing what they did, and that's getting a strong breakout above the bull channel. It's strong enough up so that the odds favor at least a small second leg up. There is some resistance above. The bears had potential top here. We broke above it, we pulled back and rallied, and there's a measured move up about 9 points above where we are, 10 points above where we are. So that's the next resistance level on the daily chart. Because we had that small doji bar on Friday, we're probably going to soon transition into a trading range. It's a buy signal bar. Is it a sell signal bar also? I don't think anybody's going to be selling below Friday's low. The trend is so strong that any sell-off will be probably brief, a day or two, and bulls will buy below. Bears might sell at Friday's high, betting that we've already begun the trading range. But this is so strong, the odds are we'll have at least a small second leg up. Small second leg up could be 1 bar. It could be 2 or 3 bars, could be 5 bars, but probably not a lot more up before we start to pull back. The weekly chart, I think I lost count, 47 weeks without touching the moving average. If we were to turn down now, it would take at least a couple weeks to get to the moving average. That would be 49 or 50 weeks. And the E-mini has never been above its average without touching the average for more than 50 weeks. And therefore what it's doing now is extreme. Different ways to draw measured moves. We tried to top out here, failed. We tried to get a failed breakout here, failed. And then we broke out again. And a measured move based upon the height of that leg prior to this breakout takes us up a little bit above where we are. Here's that same price target. And then on the daily chart, we broke above the August high. We should have remained in a trading range, possibly traded down lower. Instead, we get a bull breakout, a breakout test, and a rally. I could do the measured move based upon this height instead of that height, but I think this is more of a pullback. So this is a breakout and a pullback. So I think this is probably the appropriate target, and that is at 25.59.5, about 10 points higher. The bears on Friday were trying to set up for a double top lower high today. So bull trend and then a double top lower high major trend reversal, and we're breaking above it. And since Friday is a buy signal bar, this is triggering a buy signal on the daily chart, but obviously not much energy. Not much energy Friday and not much energy the second half of Thursday. And that's consistent with the market beginning to transition into a tight trading range. So I don't know if we go sideways for a few days and then get one more push up, or if the one more push up is starting here, and it's too early to know whether the one more push up will be 1, 2, or 3 days or 4 or 5 days, but probably not much more. So sometime over the next couple of weeks, the bears should be making another attempt to create a top and a swing down. Monthly chart, also extremely overbought. That is 12 months without a pullback, and in the past 50 years, that has happened only one other time. Back in 1995, it went up for 13 months before getting a pullback. So therefore, this is probably not going to go up much more without a pullback. And since the bars are about 80 points tall, if the market were to trade below the low of the prior bar, it would have to pull back at least 80 points. So probably 100 to 200 points and a pullback beginning sometime within the next month or two. Okay, We're always in long. We started to channel up yesterday, but most of the days over the past week began like this. Multiple reversals in a fairly tight range, multiple reversals. We got a bull breakout here, we had a bear breakout there. Trading range early on, and that's probably what we're going to get here. Again, by going above Friday's high, we're triggering a buy signal on the daily chart. But so far, not a lot of enthusiastic bulls buying the breakout. Look at the daily chart over here. Most days, bull trend days closing near their highs. And, that increases the chances that today we'll have a bull body. And it also increases the chances that it might close near its high. Do I think it will? I think Thursday was a climax day and Friday was a doji day, a tight trading range day. So I think that we're probably going to begin to go sideways. Now, bears are trying to get a failed breakout above yesterday's high. Thursday, we had a failed breakout below a bear bar, another failed breakout below a bear bar, failed breakout of the prior day's high. Did not matter. We kept going up. Also, the rally early on was weak. We had 5 bars without a bear body, but no consecutive big bull bars. It did not become clearly bullish until somewhere in here. Because for the past 4 or 5 days, every day has had multiple reversals, betting that this first reversal attempt will be the high of the day is a low probability bet. In general, bar 1 has a 20% chance of being the low of the day, 20% chance of being the high of the day. And if you get a reversal on bar 2, same thing, 20% chance it's the high of the day. If the context is really good, for example, a huge gap up and then a huge bear bar, it could be 30%, but I never think that the first move on the open, first bar or 2 or 3, I never think that I can have more than a 30% chance of being successful. Most days, there's a 20 to 25% chance the first or second bar will be either the high or low of the day. So for the bears, they're hoping the breakout above Friday's high will fail and that we go down below Friday's low. Friday's a small day over here on the daily chart, and it would not take much of a move for the bears to trade below Friday's low. Right now, do I think it'll happen? No. We triggered the buy signal in a bull trend. Even if we reverse, even though Friday's low is not that far below, I think we'll probably stay above it. Again, a day and a half of sideways trading increases the chances that the sideways trading will continue. It reduces the chances that today will be either a strong bull or a strong bear day. You can see bar 1, a bull bar closing on its high, they sold above it. And they'll probably buy below it. We have a gap above yesterday's high, but this rally is not especially strong, and the follow through from the breakout, not very good. We'll probably close the gap early on, maybe in the next few bars. So a lot of bulls, instead of buying the 1 low, would look instead to buy 1 or 2 points lower. How big a bear bar do the bears need to make traders believe it's always in short? I think the bar is big enough already. The bears need it to close on its low. However, we're right above the moving average, and a lot of traders look at the past 120 bars and see reversals, repeated reversals, even after strong bear breakouts and bull breakouts. And it'll make traders hesitant to sell at the low of a bar or the low of a bear reversal, especially right above the moving average. Limit order bulls who bought the one low probably would make money. As I said, with the magnet of yesterday's high just below, a lot of the bulls would not buy the one low. However, they would consider buying 1 or 2 points lower and around the moving average. The bulls are hoping for an opening reversal up from the average. Yesterday we gapped down and rallied to the moving average and had an opening reversal down. Today we're doing the opposite. We're gapping above and we're selling off to the moving average, and the bulls are hoping for an opening reversal up. Will the bears get a series of big bear bars closing on their lows? If so, they could get a bear trend day. Remember I said Friday was small, so we could get an outside down day. However, given how strongly bullish last week's was, even if we had an outside down day today, it would more likely be part of an early trading range, tight trading range on the daily chart, than the start of a swing down. So the bulls need to do a lot more before the bears need to do a lot more before they can convince traders that this is the start of a bear trend day. Do you get a sense of urgency, a sense of, oh wow, I got to sell this, I'm going to be missing a big move? Or is it more a sense of hesitation? I look to the left and I see all the reversals, and we're right near yesterday's close in the moving average. We're still forming a higher low above the prior higher lows in a bull channel. 2 did not close on its low, so it's not a particularly good sell signal bar. Good bar for the bears. In general, on the open, if I see a pair of consecutive trend bars with decent bodies and one of them being reasonably big, closing on its low like this, I assume it's always in short. That means that we'll probably get at least a small second leg up, and it means that there probably will be sellers above 4. We know there are buyers right here, a point or 2 below 1. So we may bounce here. Not a lot of traders willing to sell the close. We're still in a bull channel, still getting higher lows and right above support. Bulls are hoping the dip below yesterday's high is similar to this kind of a thing. We sold off, tested back below yesterday's high, and formed a base and rallied for the rest of the day. You have to go back a ways to find a bear day. Here a gap up, 3 bear bars, 4 bear bars, and we got to swing down. Even then, the bulls got a reversal up. Always in short, but I think a lot of bears are hesitant to sell because we're in the middle of Friday's tight range and we're still forming higher lows. And even if we do drop below the 81 low, there's probably not a lot more down. We may get below Friday's low and form an outside down day, but the odds are still against a big bear day. Every bear bar that gets added makes it more likely that we've seen the high of the day. Right now, it might be a 50% chance that we've seen the high of the day. Is it sell the close? Now it probably is. Bar 3, maybe bar 4, I think it is sell the close. But the problem that traders have is we're still in the middle of a 100 bar, 120 bar tight range, and therefore a trading range is more likely than a bear trend. And if it's a trading range, the bears need to stop up here, so they're risking more than 4 points. Most of the bears selling here are trading small, putting a stop above here, and they're willing to sell more higher. Bulls hoping for an opening reversal up from the moving average and yesterday's close and a higher low 81, but they'll probably need at least a micro double bottom. Can there still be a bull trend day? It's not likely, right? So the best the bulls probably get will be a bull leg and a trading range day, even though we triggered a buy signal on the daily chart. When you get a series of decent bear bars on the open, the day usually becomes either a bear trend day or a trading range day. And we don't know yet. That's what the market is deciding here. If we get a rally that retraces back above the one low, then it's probably going to be a trading range day. If we keep getting bear bars, then obviously the chances of it being a bear trend day start to go up. Sometimes when you trigger a buy signal on the daily chart like this, you'll get a deep pullback, and then the market triggers the buy signal again. It goes back above the high of above yesterday's high, to Friday's high, to trigger the buy signal again. And if it does, that would increase the chances that today's going to be a trading range day. Right now, I think it's more likely to be mostly a trading range day than a bear trend day, because the bull trend has been so strong on the daily chart, and the past day and a half have been the past day and a half the market has been in a pretty small range. Sell the closed bears probably will scalp. We're 5 ticks below the 4 close, and you can see a little bit of a bounce. In part, that's from bulls buying the 81 low, and from bears scalping out, switching to scalp mode. Can you buy betting on a trading range? You might have to use a stop a couple points below yesterday's low. I think it's too early to do that. A lot of the bears will take partial profits here, especially with any reversal, because they know the bulls will try to get an opening reversal early low of the day. The bulls want to trigger the buy signal again by going back above yesterday's high, which I think they probably will do. So right now we're deciding bear trend day or trading range day. I think trading range day is more likely. Strong sell-off, opening reversal up after 3 bear bars, but the bulls had a double bottom. Strong sell-off, but again, the bulls had a double bottom, opening reversal up from below yesterday's low. Well, this sometimes happens. 4 very big bear bars. We went below yesterday's low, and then we got a series of 3 or 4 bear bars, and this became the low of the day. A lot more climactic look to that than what we have today. But I bring this up because it's still possible that this is the low of the day. It's not likely, but it's possible that we could just start to channel up and have an early low of the day. When you get these reversals, usually, even with, usually you do not get a new high. Or if you do get a new high, it doesn't go much above the high. So even if we're forming an early low of the day, the best the bulls probably get will be a trading range. Sometimes you go a little bit above that sell climax, but usually not much. Always in bears, if it closes on its high, a lot of the bears will get out and look to sell higher above yesterday's high and around the one low. And for the bulls, it's probably still an aggressive buy, still a low probability buy. The bears get out here above 6. Now, since Roy's in short, theoretically they have to sell again below a decent bear bar, might be 7 or 8. However, I think a lot of the bears will wait. We sold off to support yesterday's close, the moving average, the middle of yesterday's range. Most likely, we're going to go back above Friday's high. Friday, we had a strong sell-off, a bull bar. It went above and then went down a little bit lower. Odds are there are sellers somewhere above 6, but they may be all the way up here. Hesitation, Doji 5, Doji 7, consistent with a probable trading range day. At the moment, I think it's more likely than not that we'll get up to the one low. I don't know if we get above it. It was reasonable for bulls either to buy the one low or buy 1 point lower. At a minimum, I think we'll get back above 1 point lower, 1 point below the one low, which would be back above yesterday's high to try to trigger the buy signal bar again. But the bulls might need one more push down or some kind of a double bottom before they get that test up. They see this sell-off as a sell vacuum test of support, 15-minute moving average, yesterday's close, 81 low. So they see it as a bear leg in a trading range day, or possibly simply a sell climax down to support, and then they're hoping to get a bull trend day. But bar 3 and 4 are strong enough so that probably we're not going to get a bull trend day out of this. Obviously, if we start to do this, 3, 4, 5 consecutive bull bars, then the odds will increase that we'll get the bull trend day. Here, we got 3 bull bars and then a good bull bar and then another good bull bar. If we start to get a lot of decent sized bull bars closing near their highs, then we could get an early low of the day. I think always in bears, they don't have to get out here. They can keep a stop above 1, but I think it's probably good to get out. And the bulls, I think you're only buying if you have a stop somewhere below yesterday's low, maybe a couple points below yesterday's low. Bears will probably look to sell again around yesterday's high, Friday's high, and the low of bar 1. Limit order bulls, as I said, I thought they would not buy the low of 1. I thought they would buy 1 or 2 points below. And therefore, those limit order bulls who did buy 1 point below, 2 points below, are buying more above 6, but looking to get out around 1 point below 1. So they'll try to get out break even on their first buy, and then with a small profit on their second buy. You can see the bears who sold above this bar, sold more higher. They did not get a decent bear bar. And then look at this bar. When it tested the high of that bar, it reversed up quickly. And that tells you that the bears were buying back their shorts in a panic. They sell above the high of the prior bar, even though it's a bull bar, reversing up from below yesterday's low. And they sell more higher. And they were so disappointed by how strong this was, that they were very eager to get out break even at their first entry. And you can see when it got down to their first entry, the market raced up. The bears who sold and sold more higher were very happy to get out with no loss or a small loss at their first sell and with a profit on their second sell. And the bulls knew the bears were going to do that, and therefore the bulls bought at the one high as well, knowing that the bears would buy there. Bears trying to do this, like yesterday. Strong bear bar is a good bull bar, probably sellers somewhere above. Five ticks down and then some pause. Some of the bears scalped from 1 point. We're so close to yesterday's low, and yesterday was a small day. It increases the chances that today will be an outside down day. However, because the rally was so strong, if it does go outside down, it probably will not be a big bear day. So probably buyers somewhere below yesterday's low on the daily chart. These decent bull bars, 6 and 8, reduce the chances that today is going to be a big bear trend day, and they increase the chances that it's probably going to be another mostly sideways day. Bears scalped. They sold the 6 high and it had to fall 5 ticks, which it did, and now it's reversing up. So that tells you that there's not a lot of conviction on the part of the bears. I still think we're going to get back above yesterday's high again and trigger the buy signal on the daily chart again, because that's what typically happens. Obviously, if we collapsed far below yesterday's high, we probably would not get back above yesterday's high. However, so far, that is not the case. We have not collapsed strongly below it. The market's deciding whether it's going to go outside down or form an early low of the day above yesterday's low. The hesitation means that there's not a lot of conviction despite the early sell-off, and it increases the chances that we're going to get a mostly trading range day. Bulls trying to get a second reversal up to get above yesterday's high, but probably sellers around yesterday's high and the low of bar 1. A lot of traders are hesitant to trade with stops because they're expecting mostly a small trading range day. And you can also see traders are scalping. Bulls bought below 8, and a lot of them are trying to scalp out with 1 point. They need a 5-tick bounce, and so far they have a 4-tick bounce. Stop order bulls above 10. What's your goal? If it's a 1-point scalp, I think the math is not all that good unless you're willing to use a wide stop and scale in lower. Similar to buying above 15, you can take the buy if you're going to use a wide stop and scale in, but if you're just buying for a 1-point scalp after that much selling, the probability is not high enough, and the same is true here. So the probability for a 1-point scalp buying above 10, unless you're willing to use a wide stop, is small. For the bears, a low too short, below 10, but bull bar 6, bull bar 8, bull bar 10, they bought below 8, and they made money buying below 8. Not a lot of bears are going to sell below 10. Remember, the always in bears get out above 6, and they're looking for a decent bear bar to buy again, to sell again. So if 11 is a bear inside bar closing on its low, some of the swing bears will sell again below 11, betting that we'll get down to the next support level, 60-minute moving average and yesterday's low. But this is a tight trading range in the middle of yesterday's range, and it reduces the chances that today's going to go very far up or down, increases the chances that it's going to be another mostly trading range day. Traders want to buy low and they want to sell high. 60-minute chart. I mentioned last week that this was probably an exhaustive buy climax and that we probably would go sideways for 10 or more bars. Maybe 2 legs down, 1 pullback 2, but the odds are whatever we do over the next few days will probably lead to at least 1 more leg up. Getting near the end of the first hour. So far, an outside down hour. The bears wanted to close on its low, but even then it's still in a 10-bar tight range and not likely to lead to a big move down. A low 2-bear flag, but in the middle of yesterday's range, so not a high probability sell below 11 and not a high probability buy above 10. So probably buyers somewhere down here. Yesterday's low, 60-minute moving average, and probably sellers up here. Yesterday's high, Friday's high, and the 1 low. Not high enough probability for a buy above 10, not high enough probability for a scalp below 11. We're in a tight trading range in the middle of yesterday's range. Not a particularly good buy below 11 because it's a bear bar closing on its low. Failed low 2. Bulls still trying to get an opening reversal up from the 15-minute moving average in yesterday's close, and they're trying to trigger the buy signal above yesterday's high again. More likely than not, they will, but not good stop entry trading here. Always in short, magnets above the 1 low, 1 point below 1, and yesterday's high. This is the end of the first hour. Bears want the 60-minute bar to close on its low, below the low of the last hour of Friday, and the bulls are trying to get a good buy signal bar here for a bounce back up to yesterday's high. Bulls could not close the bar on its high, so it's less bullish than it could have been, and that will make a lot of bulls wait instead of buying above 12. Swing bulls can buy and swing bears can be short, but it's more likely going to be a trading range day, and it's probably still too early to be swing trading. Sell, even though we're still always in short, and not a good buy, middle of a tight trading range, and only a 1-tick full body. And the range here is so tight that it's probably not even worth trading with limit orders. I think it's better to look to sell somewhere up here around yesterday's high and buy somewhere around yesterday's low in the 60-minute moving average. As I said, I think we're going up, but we may get 1 more push down first. I think we'll get back up to yesterday's high. It's important to remember that when the market makes a strong move on the open, 50% chance it's in the wrong direction. So no matter how strong a move is on the open, 50% chance it'll be a failed breakout. Still always in short, but terrible follow through after the sell-off. It reduces the chances that today will be a big bear day. The more bear bars you get early in the day, the less likely the day will become a bull trend day. You could still get a reversal day, back up to the open of the day, for example, but the odds are against it from being a big bull trend day. So today will probably either be a bear day or a trading range day. And if it's a bear day, probably not a big bear day. We're getting a lot of hesitation in the middle of yesterday's range, and we have support below yesterday's low and the 60-minute moving average. Yesterday's low is support because look at the daily chart. We have a lot of strong bull bars, and therefore bulls will buy the first pullback. The first time the market goes below the low of the prior bar, the odds are bulls will buy it. So if we trade below yesterday's low and go outside down, probably buyers just below yesterday's low. Nobody wants to sell here. We're not going down. Nobody wants to buy here. We're not going up. Traders want to buy lower and sell higher. 15-minute chart, 3 consecutive inside bars. Still always in short, but a lot of hesitation and support below, so probably not going to be a big bear day. This is the Globex 15-minute chart, and this is the day session. Does it look bearish? No, it looks like we rallied strongly, and we've been going sideways for a lot of bars, maybe 50 bars. Will the bulls buy the 6th low, or will they buy around yesterday's low and the 60-minute moving average? Probably they would be more interested in buying lower. For the bulls, they're hoping this is a wedge bottom. And an early low of the day. And bears want to push it down as low as they can get it. But not a lot of traders willing to sell low when you have a lot of sideways trading. It's still not all that clear, slightly more bearish than bullish, but not much. Bear breakout, but close above the low of the day. 70% chance we've seen either the high or low of the day already. And right now it's obviously much more likely that we've seen the high. We're getting near the 18-bar low, and the market often tries, if bar 18 is near the low of the day, bulls try to get a reversal around bar 18 to create a low of the day, and the bears want acceleration down to make it clear that we've seen the high of the day and that we'll go lower. This is an important time window here. Bulls need to create a credible reversal if they want to make this the low of the day. It's interesting, we had a wedge bottom early yesterday, Friday. Good reversal up, became the low of the day. This is bar 17, so the time window is good for the bulls. We have a wedge bottom, and that's good for the bulls, but we have a very tight range, which is not all that good. Here, a triangle bottom became the low of the day, but the trend was not particularly strong. It took 5 or 6 or 7 bars before traders believed that the bulls were in control. Once it started to become clearly a tight bull channel, traders were more willing to buy, but the rally that they got was not all that big. So this is an okay swing buy, betting on the low of the day. But for a scalp, I'm not sure that the probability is high enough. Higher probability if we start to get 3 or 4 good bull bars, and then it becomes always in long. For the bears, I don't think they'll sell above 17. And if they did go short again below 11 or 13, I think they get out again here. Yesterday we had a similar thing, a wedge bottom. We tested down again before we went up. Are we always in long yet? No, the bulls need to do more, so we're still always in short. Will the bears sell on a stop below 16? I would not. It's a 10-bar tight trading range, and selling with stops is a bad strategy. Selling with stops below 81, bulls made money. Selling with stops below 6, the bears lost, the bulls made money. So bulls are making money buying below bars, and that reduces the chances that this is the start of a big bear trend. I still think better than 50-50 chance we're going to get back above yesterday's high. Again, I don't know if this is the start of the move up, and if we do get up there, I think the odds are against a big bull trend day. You know, we're 18 bars into the day, and we've had only 2 decent trend bars. That makes it more likely that today is going to be a trading range day. We've had a swing down. The bulls are hoping that this is a swing up, but we may have to go sideways more. The bears have a problem. We have a wedge bottom, and we're above yesterday's low. We're above the 60-minute moving average. They're always in bears if they get out above 6. I think they get short again below 11, but I think they get out again here above 17, and I don't see an easy way for them to get short down here. They might sell up here around the 1 low, right? But down here, I think it'll be hard for them to get a sell setup. You know, instead they'll need a strong bear breakout. So for the bears, they'll sell either a strong bear breakout down here, or they'll look to sell a failed rally somewhere up around here or here. And for the bulls, not yet always in long, but you know, at the moment, it's hard to see the bears getting. It's hard to see the bears selling again over the next few bars. So probably buyers below things. They've been buying below, making money. Top of the tight range, but I think very difficult to make much money here. Bulls trying to get 3, 4, 5 consecutive bull bars to convince traders that we've started to swing up, maybe back to the open of the day. And the bears are trying to get trend resumption down, but they should not have allowed the wedge and the decent bull bar 17. Friday, we tested down several times after trying to reverse up, and we may do that again here. Probably buyers below 17. By the close of bar 18, 90% chance we've seen either the high or low of the day. That means that if we go below 16, 90% chance we're not going back above 2. That 90% chance this will remain the high of the day, even if we get a reversal. And the opposite is also true. You know, right now, 16 could be the low of the day. So if we get above the high of the day, then 90% chance we will not come back down here. For the bulls, the risk-reward ratio is very good here. They're buying here, betting that we've seen the low of the day, so their stop is not far below. And for the bears, they have that strong reversal down in their favor, but risk is greater for them. Theoretically, their stop is still up here. Buyers or sellers here, after 3 bull bars and a wedge bottom, probably buyers somewhere below the 19 low. But on Friday, we had to go all the way back down to the low repeatedly before the bulls got a reversal. And even then, the first reversal up was minor, and we had to get a second reversal up. That right now, there's a 90% chance we've seen the higher low of the day. Can you sell on a stop below 16, betting that 2 will remain the high of the day? Sure, but your stop is way up here. You're risking about 7 points, and going below 16 does not make a bear trend day, it simply means it's not likely to go above the high of the day. So we could go below 16 and then channel up for the rest of the day and fail to get above the high of the day. So, yes, the market does not get back above 2, but you ended up selling at the low of what became a trading range day. So if it goes below 16, then the choice, 90% chance the choice is either trading range day or bear trend day. And if it's a trading range day, we could get all the way back up here and it could still be a trading range day. When a day has a lot of trading range trading like this, and then you get a breakout of the 18 bar range, you have to be careful because there's an increased chance that the breakout will be small, 1 or 2 ticks, and reverse up, and then it becomes the low of the day. Here's bar 18. We went a little bit above, yet it became the high of the day. The range was small, a lot of trading range trading. Here, bar 18 right here, we went a little bit above it, reversed down, but the reversal became a pullback, and we went a little bit higher. Ultimately, though, we broke below the low of the day. This is one of those 10% of the times when the market goes above the 18 bar high. In fact, even went back above it, yet went down to a new low. Bar 18, we went to a new high, and this is what I was talking about. 90% chance once we went to the new high, this would remain the low of the day, and it did. But the market sold off for the last 4 hours. So even though this meant this would remain the low of the day, we could still trade down for several hours. This is similar to today, early sell-off, and this is bar 18. Let me expand this. $18 range, like today's, relatively small. Today's actually bigger than this, but this is about half of an average day's range. So if you get a breakout of the 18 bar range, maybe 50-50 chance you're going to get a reversal. I'm going to say it's probably more like 40%. And we wasn't long yet. The bulls probably need a little bit more, but not much more. Obviously they want to get above the top of the range, above bar 9, and they would prefer to close above it. We're getting near the end of the second hour. First hour outside down, but a 10 bar tight trading range, so sideways more likely than bear trend. The bulls are trying to get a bull reversal bar on the second hour. Bears, as I said, I think they're out of shorts, and I don't see how they get short again unless we break strongly below 16, or unless we go sideways for 5 or 10 more bars and create some kind of a sell, or unless we form a lower high somewhere up here. Odds are slightly better than 50-50. We're going to go back above yesterday's high. Yesterday, by going above yesterday's high, we triggered a buy signal on the daily chart, and we immediately reversed down. When the reversal down is not too extreme, the market usually tries to trigger the buy signal again. And if it fails twice, that increases the chances that we'll get a trend down. Important here, can the bulls get a breakout and start to reverse the early sell-off? You can see the reversal up here was not strong, yet it remained the low of the day. Some days just make repeated reversals. So here we got a new 18 bar low, but it still continued as a trading range today. Let me work on this to make it clearer. Okay, let me label bar 18. Four, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So that's bar 18. Will the bulls scalp for 1 point? They might take partial profits at 1 point, but I think it's better than 50-50 chance we're going to get up to around yesterday's high to try to trigger the buy signal again on the daily chart. Bears trying to create a triangle and get a bear breakout, or a double top. They had a double top here, have not broken below the neckline yet. I think more likely than not, we're going higher. Less likely, we'll reverse down, break below 16, and fall for a measured move down based upon the height of this trading range. bulls need one more tick for a 1-point scalp because the rally is weak and the actual risk is small. Some bulls will take partial profits here, but it's a possible low of the day, so okay also okay swing trade. Measured move up. Some computers will view this as an outlier and ignore it, and they'll say the range is this, and therefore the measured move target is here, back to around the open of the day. Others will look at the entire trading range, and then the target is one tick above the open of the day. But anyway, somewhere up there is the target. There will be bulls selling around the one low and around 1 point below because of what I said. It was not a good sell setup, probably buyers below 1 or 1 point below, 2 points below. So some bulls will start buying either here or 1 or 2 points below. They've been disappointed by the size of the sell-off, and they'll be happy to get out break even at their first entry back at the one low or 1 point below. And they'll look to scale in, buying above a bull bar, maybe above 6. Maybe, certainly above 17, if not above 6. And those scale-in bulls will look to get out somewhere, either one low or 1 point below, which is right around yesterday's high. Might get a breakout here. Bulls trying to reverse 3-4. Odds of a bull trend day, small, maybe 20%. That'll be a bull trend day. But as I said, we could rally up for hours and still stay below the high of the day. So we would end up with a bull leg with thinner trading range day, but still trading range day. The range is so tight, there are a lot of bulls who are trying to scalp part or all off at 1 point, and they need one more tick. So there are a lot of bulls with sell limit orders exactly right here. They buy 1 tick above 17, and they're trying to take part or all off at 1 point. So their sell limit order is right here, and the bears know that. So the bears are selling right here, trying to trap those bulls. The bears want to get back down to around the buy entry price above 17, knowing that if they do, a lot of the bulls will give up. A lot of the bull scalpers will give up. Swing bulls, I think, are holding for a move back above yesterday's high. Time in sales, it's amusing when you see all the one-lot trades taking place here. There are huge buy and sell orders that are ready to be unleashed here. It's a critical price, and right now it's just all onesies and twosies. I'm just showing, how it's mostly one-lot trades, and most of those are institutions, just institutional computers. However, the reason why I have it up is just for entertainment purposes. When we get that breakout, we'll probably suddenly see, a 200 or 300. Okay, we get the breakout, and it was all ones and twos. Let me see, any big trade in there? No, it still broke out with ones and twos, but we'll probably get a we'll start to get, 1 or 2 or 3 big trades, 200 contracts, 500 contracts, sometimes even 1,000 contracts. We're at a critical price, It's really fascinating that it's still all small trades. 74 lot is actually still pretty small. So some of the bulls are scalping out. I wish TradeStation would allow a wide screen so you could see a lot more of this, but you cannot. It's interesting, not a single big trade, not a single trade of over 100 contracts. Anyway, so some bull scalpers will take partial profits here. To me, it's pretty unusual. Actually, you know what? I just looked at the time and sales on Interactive Brokers, and there are a bunch of trades that are 500 contracts, 300 contracts. TradeStation does not show every trade. IB does not show every trade either. But here's a 250 contract trade. IB is showing a lot more huge trades up here than TradeStation. There's another 900 contract trade that just took place. So TradeStation time and sales is useless. You assume it's showing the actual trades that are taking place, but it's only showing a small part of them. I don't know if it only shows stop entry trades, but it's not showing all the trades. Even IB, I don't think they show all the trades. They might, but a lot of the numbers on IB are useless as well. Every now and then, you'll see a trade on IB that says 35,000 contracts, and the price does not move a tick. And that tells you that the trade was not a 35,000 contract trade. However, it may have been the final trade in a 35,000 contract trade. So some institution may have been buying or selling 35 E-mini contracts at a variety of prices, like scaling in as the market goes up or scaling in as the market goes down. And for whatever reason, IB chooses not to show every individual entry. They just show the final one, and they'll show it as 35,000 contracts. And then there's also the possibility that IB has a mistake, that it's not 35,000 contracts. Somebody, something just went wrong. Somebody plugged something into the computer wrong. I don't think any of it is entered manually, so it's hard for me to believe that it's a mistake. So it makes me believe that it's the final trade in a huge order. All right, so at this point, we're always in long. And at a minimum, the bulls are trying to get back to yesterday's high to trigger the buy. Bar 24, the final bar of the hour. And therefore, you can see we're closing at the high of the hour. So the 60-minute bar is a bull bar. But just like we had an outside down bar last hour in a tight trading range, now we're getting a bull reversal bar in a tight trading range. It reduces the chances that we're going to get much of a rally. Probably buyers below 25. When you look at that, do you say, wow, what a great low two short, 2 legs up, 1 pullback 2? Or do you say, we're getting a lot of bull bars, even though they're not big, it's a lot of bull bars, and a lot of the bears will wait for a second entry short and not sell below 25. I bought at the 19 low rather than above the 17 high, but I thought either one was okay. I am still long because I think we'll go a little bit higher. Sometimes when I try to take a limit order entry like this, I don't get filled. It just starts going up, 4, 5, 6, 7 bars before it has a pullback. And then I'll either buy at the market on maybe the 4th or 5th bar, or I'll wait to buy at the low of the prior bar. So that's a risk that I take. The reason why I did not buy the 17 high was we're in a tight trading range, and a lot of times the market goes 1 bar up and immediately reverses. So we had a bull bar here, second entry buy, triggered the buy by going above 12, but immediately reversed. I wanted to see if there would be a bull body for the entry bar, and if the entry bar would go 2 or more ticks above 17. And at that point, I thought it was worth buying. So for the bears, a failed breakout above 9, a low too short 19. I think always in long, so probably buyers somewhere below 25. Low probability short. Trading range days, when you look at them at the end of the day, you'll see they're just all two-legged moves up and down. Here we have a two-legged move down, one pullback, two, and we already have a two-legged move up here, one pullback, two, but only one bear bar in the past 9 bars, so probably buyers below 25. So even though the bears have a failed breakout, a low too short, and we're in the neighborhood where the scale-in bulls will be getting out, the odds are still that will go a little bit higher. I said we would test yesterday's high to try to trigger the buy signal again. And usually traders do not think that the test is complete until it gets to within at least a tick of the target. And we're 2 ticks below yesterday's high. So a lot of the traders believe that we have not yet tested yesterday's high again. Now I said you had limit order bulls buying the 1 low or 1 point lower. I thought 1 point lower, 2 points lower made more sense. And those bulls are hoping to get out break even. 1 point lower is right at yesterday's high. So there are a couple of reasons for the market to get at least to within a tick of yesterday's high. The bulls who did buy the 1 low and who bought more above a strong bull bar here, some of them will be so disappointed by all of this that they're happy to get out break even. And they'll place a limit order to get out right between their 2 entries. They got long here, bought more 1 tick above here, and they're getting out break even here. And you can see we went 1 tick above that average price, and what happened? We sold. And that tells you that there are a certain number of bulls who did do exactly that. They bought here, they waited for a strong bull bar, and bought more here. They did not buy here because first reversal up probably would fail. They did not buy here because only a 1 tick bull body and a 1 tick tail, but they did buy here. And this is their average entry price. And as soon as it went above that price, they exited. They had a limit order to get out at that price. So you have some scale-in bulls exiting, selling at that red line. And that's part of the reason why we have that tail. But I think odds are buyers below 25, and that will go at least 1 tick higher to get to within 1 tick of yesterday's high. It's possible this is the low of the day, but I don't know. We have not broken out of the 18 bar range, and we're still in a trading range. The bears want a lower high, right? So they have a lower high major trend reversal here. Bull trend, bear breakout, lower high, major trend reversal, not a good looking sell, good sell off, and now the bears are trying to get another lower high, and they're hoping that we just channel down in a series of lower highs. And when you're in a bear channel, and we might be, when you're in a bear channel, the bears usually try to sell any rally that goes up about 50% of the prior bear leg. It turns out it's exactly the same price as the average entry price for the bulls who bought the 1 low and more above 17. But it's a 50% pullback. It's in the sell zone for the bears hoping for a bear channel. However, this reversal up is strong enough so that a lot of bears will want a second entry sell. Bulls trying to get a failed low 2. And we had a low 2 with 8 and 11. And we have a failed low 2 at 12, but did not go up very much. The bulls are trying to get above 26 to make a failed low 2 here. But as I said, I think the odds are against the market going very far up, and the odds are against the market going very far down. The bears, 50% pullback. They hope that this is a lower high, and it leads to 2 legs down, 1 pullback 2, or a bear channel for the rest of the day. But more likely buyers below, and we'll try to go a little bit higher. Tight bull channel, only 1 bear bar in the past 8 or 9 bars. So it makes it a low probability short. It's a small second leg trap, leg 1 pullback, breakout attempt leg 2 in a probable trading range day. but we have a magnet above, so we're probably going a little higher. We're close to the resistance. Several resistance things right here. Yesterday's high, the bulls are trying to trigger the buy again to see if they can reverse this. The bears will try to sell again back around yesterday's high. 2-point bulls are trying to sell 2 points above the 17 high, so their limit order, 2-point bulls are trying to sell 9 ticks above the 17 high. All right, so there are a lot of limit orders to sell 1 tick above 25. And then you got the scale-in bulls who bought either at the 1 low or 1 point below. So there are a bunch of reasons to sell right around where we are. Is it enough to go short? I would not. I would need a pretty good reversal down. And even then, we'll probably just go sideways in here. This is a tight channel, and when you have a tight channel, usually the first reversal down is a pullback. We may come down to the 21 low and try to form a double bottom, and then try to get back up. Bears are hoping this is a lower high, a wedge maybe, 1, 2, 3, but there are several different magnets a little bit above, so I think we probably have to go higher. I don't know if we come down here first. And for the bears, I would wait for either a strong reversal down or a reversal down and then some kind of a double top. You can see last hour, first hour outside down, but no follow through selling. Second hour, a buy signal bar. And here we are 30 minutes into the bar, and it's a terrible buy signal bar. So not much buying. Probable trading range day. Are we still always in long after 3 bear bars? I think so. We still have magnets above. The channel here is pretty tight. Odds are we'll get at least a little bit more up. And for the bears, they need to do more. And they need to get below 21 at a minimum. The bulls would try to create a double bottom there. Really not much to do. I think Royce and Long stop below 16, maybe below 22. And for the bears, I think not a very high probability short. You had some bears who sold the 9 high betting against the breakout, but they got filled over here, and here we are 10 bars later, and they still don't have a profit, and they were not able to scale in higher. So a lot of those bear scalpers will probably buy back their shorts. Not much going on. We're getting near the end of the 3rd hour. A bad entry bar for the bulls, but that's expected because we're in a tight range on the 60-minute chart. Bears want a lower high. This is the 5-minute chart. A lower high major trend reversal, but strong enough, tight enough bull channel. First reversal down, probably minor. Bears trying to get a second reversal down here, but this looks like a trading range and no sign of a breakout one way or the other. And if you look at a higher time frame chart, this is a 5-minute chart, but if you look at a 15 or 60-minute chart, this trading range is a bull flag, which means the odds still are that we'll get a bull breakout. Here's a 15-minute chart. Here's a 60-minute chart. Okay, double top, but the pattern is too small and the channel is too tight. 20 gap bar buy. Odds are bull flag and higher. Lower probability bet that we're going much lower without first going higher. Back to the 5-minute chart. Right now, this is more likely a bull flag than the start of a bear trend, but 1 or 2 bear bars would flip the probabilities. When a day is mostly a trading range day, when it starts to look particularly bearish, it's going to reverse up, and when it starts to look particularly bullish, it starts to reverse down. And that's just the nature of trading range days. As soon as traders think it's about to break into a trend, that's when it's usually about ready to reverse. I still think the odds are we have to get closer to the high of yesterday, but we did the 50 pullback, and that might be all that the bulls get. Getting near the end of the third hour, and the second hour ended with bar 24. Third hour began with bar 25, and the bulls are hoping to get a bull body, which means they want bar 36 to close above the open of bar 25, which is just a couple ticks above where we are. And they see this as a high 2 bull flag, and they're hoping for leg 1 pullback, leg 2 back to the open of the day or the high of the day. I don't know that we get up all that far. We still have not broken out of the range of the first 18 bars. We have a range here, and we've broken above it, and the bulls are hoping this is a pullback and that we go higher from here. It's more likely than not that we're going at least a little higher, but look at how many bars today are 2 or 3 ticks tall, and look at how much time we've spent sideways in a narrow range. That makes it unlikely that today is going to go very far up or down. I think we're always in long, so I think we're going at least a little higher, but I think the odds are this is a bear leg in a trading range day. This is a bull leg in a trading range day. Sometimes, like I said, you get an early sell-off, and then the day becomes a reversal day, and it just channels up all day. When it does, it rarely ever gets much above the high of the day. So even if we go up for the rest of the day, even if we get above the high of the day, we probably will not go much above it. And therefore, the upside from here is small. The bears have a decent sell-off. They're hoping to get a measured move down based upon maybe the size of the bodies here. The first bar of the bear breakout to the final bar of the bear breakout. Measured move takes us down to yesterday's low, but probably not going to be a big bear day either. And right now the market's deciding whether it's going to go up here and then turn down, or turn down here and then go down here and then turn up. So is it going to turn up from here and go a little higher, or is it going to go down here and then turn up? Unlikely to trend all that far up or down. You know, the market is very happy at this price. You know, we're in basically a 1 point range for, you know, almost an hour, and we're back in that range. Bears getting their breakout, bulls giving up. At a minimum, they'll look for a measured move down. We're in a tight range. Measured move down takes us to around the low of the day. Bulls try to get a double bottom with 21 or a double bottom with 16. Trading range days, so a lot of traders unwilling to sell low and unwilling to buy high. This is probably more bulls who bought above 17 giving up than bears selling aggressively, betting on a swing down, but we'll see. Bulls now trying to get a failed bear breakout and a wedge bull flag. And bears are hoping for a measured move down, which only takes us to around the low of the day. Are we still always in long? Probably, even though we have not had a bull bar in about 9 bars. The bears need more. They need to get below 16, or they need to get bigger consecutive bear bars before getting below 16. Does not look like there's enough room for that to happen. Bulls still trying to get a wedge bull flag, a double bottom with 21. You have bulls buying with limit orders right here, betting that the double bottom holds. You know, just like yesterday, they bought at this low, they bought repeatedly, and we got a rally from there. Over here, you know, they bought just above that low. Here they bought above this low. A lot of times you get perfect double bottoms, perfect double tops. Here, the bulls tried to get a double bottom with this low, and we got a bear breakout, but it immediately reversed up, and it became the low of the day. The rally, lots of little dojis, but small pullback bull trend, and it just kept going up the rest of the day. small, double, or triple bottom. Bulls buying with limit orders at and just above the prior low. And after 2 or 3 times, the bears give up and the market goes the other way. Double bottom here. Not many double tops because the market's been trading up so much here. We have a double bottom here, tested it again here, and rallied. Bears double top here, and then slightly lower high, and then a little bit lower. What I was starting to say is, when you have an obvious bottom like this, you'll have bulls buying with a limit order at that low or 1 tick above, trying to prevent the market from falling below it. And then if it goes up, they'll have risked 2 or 3 ticks, 3 or 4 ticks, and they'll make 2 or 3 points. They buy with a limit order, let's say 1 tick above 21, and they put a stop 1 or 2 ticks below. So they're risking 2, 3, or 4 ticks, hoping that we go up 2 or 3 points, and they'll get a reward 2 or 3 times their risk. Now, what about bears? Will they sell 1 tick below 21? 1 tick is usually not enough. Usually you have to get 2 or 3 ticks before traders believe the bears have a decent chance of trading down. I talked about that over here. A triangle. As soon as you have 3 reversals up, you have a triangle. And the bears got a bear break below the triangle. A reasonable swing short, but you always have to be prepared. 50% of triangle breakouts reverse. And if you get 1 tick below and it starts to reverse, that increases the chances that instead of a bear breakout, you're going to get a bull breakout. I still think the market's always in long. But am I bullish? No, you cannot be bullish. The market has been sideways in a very tight range for 3 hours now. I am back to flat. I ended up giving up over here along with a lot of my friends. So I ended up with a small profit. The bears have basically an IOI where the O is 2 bars, so it's an IOOI, but a 1 bar doji bar on 42, no energy, so low probability trading to buy here or to sell below 41. It's a second entry buy. We have a failed breakout. 38 failed when it went above 39, and now we're getting a second entry buy. But where are the big bull bars? There's just no energy. Still slightly more bullish than bearish. The big thing in favor of the bears is this strong sell-off. However, we have a wedge reversal, decent enough reversal, higher low, odds slightly favor a second leg up. Plus we have that magnet at yesterday's high. On the daily chart, the break above yesterday's high triggers a buy signal. It's a pause in a strong bull trend. But Thursday, big buy climax. Friday, a doji bar, probably the start of a tight trading range. But even if we pull back for 2 or 3 days, chances are we'll go a little bit higher. We have different targets above, around 2560 is one measured move target on the daily chart. And then there's another one over here. This is the weekly chart at 2577.5. So we're in a sell zone. But even when the bulls get their correction, it probably will only be 100 to 200 points. And this is the weekly chart, the best the bears probably will get will be something like this, but falling, maybe 100 points, 150 points, maybe that much. That's probably a lot, but we might get something like that. Usually you have to go sideways for 5 or 10 or more bars before you can get enough selling pressure to get that. Traders have to believe the bears are strong enough to take control. And without that, you usually do not get any kind of a significant reversal. Getting near the final part of the day, the bears want trend resumption down, leg 1, pull back leg 2, and the bulls want a second leg up from this reversal. So it's bear trend, trading range, and then either trend reversal up or trend resumption down. After this many bars, after 20 bars, it's basically neutral. And here we are, 50 bars, so 50-50 chance. If there's going to be a breakout to the downside, it'll be down, 50% chance it'll be up. Perfectly neutral. I have not taken any E-mini trades in here. I just wait. Bears trying to get trend resumption. Bulls will try to get a double bottom, either with 40 or with the low of the day. The odds are against a big move down. The odds are against a big move up, because whenever the market is in a very tight range like this, it usually does not break out into a strong trend. By going below 40, we're probably always in short if it closes down here. Obviously, if it closes on the high of the bar, then it becomes a big two-legged correction, 1 pullback 2. But if it closes below the breakout point, especially if it's a decent-sized bar, it increases the chances of a little bit more down. We still have not broken out of the range of the first 18 bars. Here's the 18th bar. Have not gone below the low of the day, have not gone above the high of the day. 60-minute chart, very tight range. Not enough bars for a major reversal. Only 4 bars down, 5 or 6 bars up, very tight range. So if we do break below this low, it's probably a minor reversal, which means a big high 2 bull flag, leg 1, pull back leg 2 on the 60-minute chart. The downside risk is not very big at the moment. Close at the 40 low, not below. So I suspect we're still always in long, so slightly more bullish. But you can take the bear case and say that we sold off so strongly here that this is simply a relief rally from the sell climax. For me, I'm almost completely neutral. I guess I'm slightly more bullish, even though we had that big sell-off. But basically, it's hard to be more than neutral. We're in the buy zone at the 40 low, but with the range over the past 20 bars only being 5 ticks, I think it's better to do nothing. Bears trying to get below the 60-minute moving average and below yesterday's low. They would like the day to become an outside down day. Leg 1 probably ended here, and this is a pullback. And now the bears are trying to get a second leg down. Is leg 1 down to 6 or 16? Some computers will say 6, and they'll say 16 was part of the pullback, A, B, C. And then the second leg down began here, takes us just below yesterday's low. Other computers will say leg 1 ended here, and it takes us about a point below yesterday's low. Unlikely to go much further. Stop entry bears 56 made money, but traders are very hesitant to sell too low. It's comparable to what the bulls had over here. Traders were hesitant to buy too high when all the bars are small and the market is sideways. It's always possible to convert into a trend at any time, but the bears need more than just consecutive bear bars. They need big bear bars, and they're not getting them. Probably buyers below 41, probably buyers below 16, buyers 60-minute moving average, and buyers below yesterday's low. The bulls still have time to buy below bars and scale in. I'm flat unless this accelerates strongly below the 60-minute moving average and yesterday's low. I would rather be looking to buy where we are and lower. Look for a reversal up, leg 1, pull back, leg 2. The market can get me to change its mind if it starts doing this again. Remember, we still have not broken out of the 18 bar range. The bottom of the range is here. We're right at the bottom of the range of the first 18 bars. If we get one tick below it, in general, 90% chance we've seen the high of the day. This late in the day, I'd like to say it's higher than 90% chance if we get below 16, but it's still probably too early to say that, especially when the day is a relatively small day. There's a higher chance that we could get a reversal all the way up to the high. However, I still think maybe 10% chance. Yesterday's low, certainly within reach. It's only a 6 ticks below where we are, but there'll be buyers 16 low, expanding triangle. 6, lower low 16, lower low 62. A couple of decent bear bars here, 2 here and 1 here. A lot of bulls will not buy above 62 for the failed breakout to a new low of the day at the 60-minute moving average. The bulls will need some kind of a micro double bottom. I think always in short, certainly with this bar, possibly you could say 3 or 4 bars down here or here, always in short. But clearly, by the time we got this bar, however, because the screen is in a trading range, you have to be afraid that, you have to be concerned that as soon as it finally becomes clearly short, you're probably near a reversal. Usually in a trading range day, once you get a strong breakout, that's pretty much the end of the leg, not much left. You can tell that some bulls just bought the strong bear close, betting that it was the end of the sell-off. Other bulls bought the 16 low. They tried to buy more lower. Some bulls bought with a limit order at the 60-minute moving average. As for a stop entry buy above 62, it's similar to buying above 6. When the sell-off is strong, the bulls usually need at least a micro double bottom, and therefore a lot of the bulls will wait for a micro double bottom. And a lot of the bears do not want to see this reversal, and they certainly do not want to see the breakout go above the 16 low breakout point, and they do not want it to get back above the 40 low. However, because it's a trading range day, it probably will. The bulls who bought with a limit order at the 61 close got filled. It had to bounce 5 ticks for them to make 4 ticks, which it did. For the bears, a breakout pullback short. We broke out to a new low of the day, and this is a pullback, a low 1 bear flag. But I think most traders are not going to want to sell here. We're reversing up at support, the low of the day, the 60-minute moving average, and now we have 2 bull bars closing on their highs. More likely buyers below 63 and below 62, so a low probability short. Broke below the 16 low, 90% chance we will not get back above the high, but we can easily get back into this trading range where we spent most of the day, and we probably will. Low 1 short, breakout test, 41 low, but I would not sell down here. A lot of the bulls want a micro double bottom. They expect a second leg down after 61, but they expect it to fail. So probably buyers below 63, buyers below 62, and not enough sellers. Terrible location. We're right at the 60-minute moving average. We still might get below yesterday's low, but there are buyers probably at the 63 low, the 62 low, 60-minute moving average, and yesterday's low. So this is not a high enough probability short for a scalp. A lot of times when a day tries to become outside down like this, trade above yesterday's high, try to trade below yesterday's low, A lot of times it'll find buyers right above yesterday's low and then reverse up. It never looks like it's going to do it, but very often it happens. You know. Here's an example. Traded above yesterday's high, sold off very strongly, could not get below yesterday's low, collapsed. Went above yesterday's high, reversed down, collapsed to right down to yesterday's low, could not get below. We got down to yesterday's low, unlikely to get much below it. We're right around a leg 1, leg 2 move. This is probably leg 1, and leg 2 probably started here. So A, B, C, and it's right below yesterday's low. So we're in the buy zone around yesterday's low and just a little bit below. It's always possible that it can go a lot further, but look at the bars over here, trading range bars, unlikely to go much further down, probably will bounce here. Strong enough breakout, so you'd expect at least a small second leg down. And right now this is the second leg down. If it becomes a big second leg down, then we probably will get more down. But right now, it's more likely that we'll find buyers around yesterday's low. So is it sell to close? Of course, but I would not do it. When you have a lot of trading range trading, it's usually better to look to do the opposite. So when you have a sell to close setup, it's better to be thinking about buying closes like the 61 close and the 67 close here. So you can see daily chart. We went above yesterday's high. We're turning down below it, below yesterday's low. I do think there's not much left to the upside, even though the daily, weekly, and monthly charts are extremely bullish. But I've been looking for a 100 to 200 point pullback for many months now, and we keep going higher. All the while, I think we're going higher, and even if we get the 200 point pullback over the next few months, I still think we're going higher. And so I think any reversal down is a bull flag. However, this is so extreme, it's not likely to go much higher without getting at least a 100 to 200 point pullback very soon. Monthly chart now is the most extreme chart. You can see some hesitation around yesterday's low. This is leg 1, leg 2, based upon bar 16, leg 1, pullback, leg 2, almost there. And here it is based upon 6, and we're exactly right there. You could also, some computers will say leg 2 began here, in which case we can get down there, but we're probably not going a lot further. Bulls need a reversal either on this bar or the next bar. Otherwise, this breakout will be strong enough so that a lot of bulls will wait for one more leg down. So leg 1, you expect a second leg down, but if the second leg is strong, traders expect one more leg down. So the bulls need to get some kind of reversal here. Otherwise, they'll hesitate to buy. They'll wait for one more leg down. Momentum down is accelerating. Sometimes when you have an outside down day, it goes below yesterday's low by as many points as it went above yesterday's high. And that means there's support right here, 10 ticks below yesterday's low. This is falling freely and no sign of a bottom. And this is what I was talking about, that if the second leg down is strong, it's probably not the end of the move. You probably have at least a little bit more down, and the bulls will probably still need at least a micro double bottom. And for me, I'm currently flat. I did not sell this. I did not buy it, but I did not sell it. So here's that other leg 1, leg 2 move. We're right there, but this is down too strongly to be buying yet. We're in the next buy zone. We reversed down from 10 ticks above yesterday's high. We're now 9 ticks below yesterday's low, but no sign of a bottom. And the breakout is strong enough so the bulls will probably need at least a micro double bottom before a lot of bulls will buy. Weekly chart, I talked about this last week, that this week could be an outside, a reversal week. That last week was very bullish. We went straight up. It's possible that we could go straight down this week. By the closed bulls, 69 did not get filled at the 69 close. They got filled 1 tick higher, and it had to go up 5 ticks from there, 6 ticks above the 69 close, which it just did, and the bulls made money. Stop order bulls, I think the channel down is tight enough so that most bulls will not sell with a stop above 70. They'll wait for some kind of a micro double bottom. And will the bears sell like above 62? Arguing that the leg down is strong enough to get at least one more leg down, I would not. We're at a reasonable goal, and the same size move below Friday's low as we went above Friday's high. We went 10 ticks above, 9 ticks below. We have a second leg down. We might get a small second leg down here for a few ticks, but I doubt we're going to go much lower. So probably we'll bounce here within the next few bars. Unlikely to go up all that much. The best the bulls probably can hope to do is get back above the 16 low and into this tight range. Trend resumption down, got a little buying at the end of the day. Trend down over the course of 2 days, and then trend resumption down, a little bit of a bounce at the end of the day. Sell off, trading range, sell off, a minor bounce, but not enough for making money. Can we go straight up? Sure. You got 2 legs down, 1 pullback 2, but this is so strong. A lot of the bulls want to see either 3 or 4 consecutive bull bars or some kind of a micro double bottom. With the 2 bull bars here, probably buyers below 71. Not a lot of bears willing to take that short. So we're back to a confusing area here. The bears do not want to sell unless we get a couple legs up after a sell climax and 2 bull bars. And the bulls are hesitant to buy because too many consecutive decent bear bars, 66, 67, 69. So they'll buy with limit orders. The bulls who bought the 62 low, the bulls who bought the 60-minute moving average, at this moment, they still will probably make money. So we're probably going to get back above the 62 low. In those examples of trend reversal or trend resumption days, I don't have an example where you get a big reversal up after a late trend resumption down. You get some profit taking. Here we went up 4 bars. This again is a little bit earlier in the day, later in the day than when we are now. So maybe the bulls will get a little bit bigger bounce. But the examples that I'm showing of trend resumption usually do not get big reversals. A low one short, a gap 62, but 3 consecutive bull bars and a symmetrical breakout below the low after a breakout above Friday's high. So low probability short, probably buyers below. Scale in bulls a little bit tricky because we're late in the day. If they buy below 72, can they buy more below 70, 69? Computers will. Individual traders might be hesitant. And for the bears, they want to sell, around the 2 moving averages, but there's probably not enough time left for a 2-legged rally to the moving averages and then a resumption down. So the bears may not sell again. And for the bulls, we're in the buy zone, and it's a sell climax. It's 2 legs down, but a lot of the limit order bulls might buy 72 low, 70 low. Stop order bulls, I think, will want a second entry buy, like over here, first entry and then second or second entry. What about the sell the close bears 69? Was it reasonable to take that short? I personally would not. Most of the day has been pretty quiet, and the sell-off has not been all that strong. We've had a lot of bear bars, but it's not all that strong. So those bears might be trapped out. They sell closes like 69. They sell more 1 or 2 points higher. So they get to sell more here and sell more here, and they'll probably buy back their shorts around the 69 close if we get there. I don't know. I'm not confident that there's even a 50% chance that we'll get there. One of the problems that the sell the close bears have is if a sell the close trend begins much before 12:30, it usually doesn't make it to the end of the day. Usually it either goes sideways or reverses up, and I think that's what the problem is here. Sell at close starting at 12:15 this day did make it to the end of the day. Usually, I guess it started at 12:20 right here, but usually not. Here's one that started at 11:55 and it made it pretty much to the end of the day. Another one starting early. I have a bunch of examples of it starting early. Here's one that did not. Started too early, got the reversal. Started way too early, got the reversal. Do I still think we'll get back above the 62 low? I don't know. I'm pretty neutral. If we only had a 1-bar pullback, I would say yes, but now 73 is the pullback bar and 74 went below 73. So that makes it pretty much 50-50 that we'll bounce that far up. We're really late in the day. And usually if the market starts to go sideways, it stays sideways at the end of the day. And that might be, even though it's only another point or two above where we are, the day is really, really small. The bars are really, really small. So I'm less certain that we'll go up. I don't think we're going to go much more down. And that leaves us with sideways. And limit order markets are difficult at the end of the day, especially when the range is very tight. $60-minute moving average, a lot of bars above the moving average. This might be 60 bars without a pullback. Traders have been willing to pay above an average price for 60 bars. They're finally getting a chance to buy at the average price, and a lot of bulls are buying here. Sometimes it'll just collapse or fall a lot below the average price before you get resumption up. But, I personally do not like to sell unless we're collapsing, and we're not. Bulls trying to get a micro double bottom 74.75, double bottom 70, and above the 60-minute moving average. But really difficult to do anything here. The low one bears 72, 5-tick trap, and the bull reversal traders 70, 5-tick trap. And mostly that's because the range and bars are small. You know, it's hard to get 6 ticks, even 1 point, never mind 2 points or 4 points. The limit order bulls who bought 72 low, 1 point lower, made their 1 point scalp. Most of them will just get out, even though we might go a little bit higher. Look at the low of 76, look to the left, and do you see any support? The low close 69. You had sell the closed bears, sold more higher, and they placed a limit order to get out back at the first entry, the 69 close, and some of them put their limit order 1 tick higher, thinking that we may not go much lower. And you can see as soon as it got to the 69 close, the bears bought aggressively. And you had other bulls who bought 1 point below 72, which is right around the same price. So you had, limit order bulls and bears buying, and we got a bounce. I bought, and I'm flat. I'm not willing to try to get more than a 1 point scalp. The day is just too small. Remember, we went below yesterday's low. By going above yesterday's high, we triggered a double top. I'll talk about this more in a minute. What I was starting to say is Friday was an inside day on the daily chart and a strong bull trend, so a high one buy.
We triggered the buy signal by going above Friday's high. However, by reversing down, we created a micro double top. And yesterday's low is therefore the neckline of the micro double top. And we triggered a sell by going below yesterday's low. The bulls are trying to get back above yesterday's low, which weakens the case for the bears. And the bulls have done that. Probably the best the bears get is sideways for a few days, maybe even 2 or 3 weeks. We may be in the early stages of this. Right now, I think last week's high is not going to be the final high. However, I think the final high is not going to be much above where we are before we get a 100 to 200 point pullback. That means over the next few days, we're probably not going far down, and we're probably not going that far up. And this is probably what the next couple of weeks will look like. Bulls coming in at the end of the day, pretty dramatic reversal. We had a 20 gap bar buy, 60-minute moving average. We've been above the 60-minute moving average for 20 bars for probably 50 or 60 bars. And bulls are finally happy to get to buy at an average price. For the bulls, it's a high 2 buy, 2 legs down, 1 pullback 2. And therefore, the 60-minute bar is a buy signal going into tomorrow. And daily chart, it's an outside bar, but a big tail following a doji. Looks more like a bar in what will become a trading range, a tight range. On the open, we had a bull bar, and I thought traders would buy not at the one low, but closer to the moving average, like 1 or 2 points below the one low. And then bar 3, bar 4 closing on their lows, increase the chances for a bear day and reduce the chances for a bull day. And while it's always possible we could get the opening reversal up above 6 or 17 and rally to a new high, even if we rallied for the rest of the day, typically if the initial sell-off is relatively big and you get a reversal, the reversal does not get much above the high. So the odds of it becoming a big bull day were small. We went sideways for about 4 hours and then got a weak bear breakout and trend resumption down. And now the bulls are recovering, getting back above the 16 low. So the limit order bulls who bought the 16 low and bought more above a good bull bar 70 were able to get out with a couple of points profit on the second entry and break even on the first. I thought the market was always in short on the close of 3, but I also thought that we probably were not going to go straight down and have a big bear day. Bar 1 and 2 both dojis, and then a doji on 4, bull reversal on 6, possible opening reversal up from the moving average and lower the day. But 3, 4 are so strong. Odds are sellers above 6, and the best the bulls get was going to be a trading range. And they did. I thought we might trade back up to the 1 low and above yesterday's high, but we did not. We got to within 2 ticks. We tried again and failed, and then we went sideways for another 20 bars, and finally the bears got trend resumption down. The breakout 57, 58, not strong. Follow through 59, 60, not great. And then the break to a new low of the day, 61, but right at the 60-minute moving average. At this point, it looks like we might go outside down, but with the dojis 59 and 60, I suspect that we're not going a lot lower. If we do go outside down, it might be symmetrical. We went 10 ticks above Friday's high. Maybe we'll go 10 ticks below, and then probably the buyers will come back. Obviously, I was not expecting the buyers to buy this aggressively, but that's because of the daily chart. It's just so strong that the bulls are buying, betting that the bear reversal is going to fail. For stop entries today, it was mostly a limit order day. So, buying above 6, buying above 12, not great. Buying above 17 because of the wedge, 81.6. I thought it was a possible low of the day, However, I thought that we would have a hard time getting much above 1. I thought we might get a couple legs up, and we did. 19 and 25. The channel up was so tight, I thought we would need a better, more convincing second leg up, and the bulls just couldn't get it. They tried over here on 48 or so, and they just couldn't get it. We went sideways, and then we got trend resumption down. For stop entries, really much more of a limit order day. I would not buy above 6. I think buying above 17 makes sense because you have an opening reversal up from the moving average, and you have a wedge, and we're in the middle of yesterday's range. So that's a possible low of the day. The sell-off is in a fairly tight channel, probably a minor reversal, but then we might pull back and get a double bottom, and then from there, a major reversal. And bulls were unable. And for the bears, not great stop entry selling below 11, selling below 13 both made sense, and both ultimately made 1 point, but within a tight trading range, probably not a very high probability trade. And then through here, buying above 21, it's a second entry 16, probably going up, maybe up to the 1 low, probably not a lot higher. And then selling here, not really good stop entry trading. Even 56, I think it's 6 consecutive inside bars. Let me see, 1, 2, 3, 4, 5, 6, 7, 8 consecutive inside bars. Now, when's the last time you've seen that? But it's there. Not a good stop entry market. The breakout, 57, 58, not strong. Not a lot of bears willing to sell below 59. 62, it's a big enough bear breakout. The bulls need a second entry buy, so probably sellers above 62. And then 64, a low one short, but at the 60-minute moving average, not far above the low of yesterday, Friday's low. And I think we'll have a hard time getting more below yesterday's low than the bulls got above yesterday's high. So if you sell it, you got to make quick decisions. And then buying above 70, I would rather enter with a limit order below 72 or 1 point below. And then above 76, I'm looking to get out of my longs, not to buy 4 consecutive bear bars. Maybe on some other time frame, it's a good looking buy signal bar, but I was getting out of longs and not getting in. Buy the close, sell the close. It was probably sell the close, always in short on 3 and 4, but we're right at support. Yesterday's close, the moving average, and we're in the middle of a tight range, in the middle of yesterday's range, and therefore sideways is more likely than much down. And buy the close, 24. It's probably always in long, but I would not buy the close because we know there will be sellers around yesterday's high and the 1 low, which is not far above where we are. And then sell the close, bear breakout, follow through 58, 59, 60, not all that good. 61 could be 2 legs down to the 60-minute moving average, 1 pullback 2. I think we're going lower, but I'd rather sell higher because I suspect it's not a particularly strong bear. And then sell the close again, 66, 67, 68. I think it's dangerous because I think we'll have a hard time falling more than 10 ticks below yesterday's high after going 10 ticks above I think we'll have a hard time going more than 10 ticks below yesterday's low because we went 10 ticks above the high, and outside days are often symmetrical. If it goes above by a certain number of ticks and then goes below, it usually goes below about the same number of ticks, and then buyers come in and you either go sideways or reverse back up, which is what we did here. Limit orders, I would not sell the 1 high, I would not sell the 1 low. I would consider buying 1 or 2 points below 1, but not when 3 looks like that. And then in here, probably sellers above 6, but not a great sell. Probably buyers below 8. I thought that made sense, but it hit your limit order repeatedly, and a lot of the bulls gave up. And probably buyers below everything, sellers above everything. Bulls bought below 6. Some bulls bought below 16. It bounced 4 ticks. It had to bounce 5 ticks. And part of this bear reversal bar 64 is the buy the low bulls exiting, giving up. And through here, same thing. Traders trying to sell above everything. As far as buying below 25, we're probably not going a lot further up. I think we'll probably get up to that red line, yesterday's high, maybe the 1 low, but probably not much higher up. So, this is a sell zone around yesterday's high, buy zone around yesterday's low. And then here, I just stopped trading. When the bars enter a very tight range, 2 or 3 point tall range, here, 1 point range, I usually just wait. Here, 62, probably sellers above, but, not a great sell because, you have a failed breakout below the low, reversed up, and now at the 60-minute moving average, and you have a 20 gap bar buy on the 60-minute chart. So not a great sell. And then down here, if you want, and you want limit orders, you either sell bull closes like 63 or 71, 72 looking for a scalp, or you buy big bear bars, especially at support, 61 at the 60-minute moving average. 67, what about buying that? Arguing we may reverse up from above yesterday's low, possible. And then 69, I thought more likely buyers on that close. It's the biggest bear bar occurring, more than 20 bars into the trend. Certainly the biggest bear bar of the past 50 bars, 60 bars, unlikely to lead to a lot lower prices. Also, it's a sell vacuum test of the symmetrical move. 10 ticks above, 9 ticks below. So if anything, that sell the close, or traders will start looking to, it's buy the close, and traders will start looking for a buy scalp, maybe for a test back above the 60-minute moving average, back above yesterday's low, and maybe above the breakout points, 62 low and 16 low, which we got. So not a lot of trading today, but fairly predictable. At least parts of it were predictable. I still think the odds are we have not seen the high. We have a measured move target on the daily chart, a little bit above the high, and we also have a measured move up on the weekly chart, a little bit above the high as well. So somewhere around 2560, 2580, that probably will be the next area where bears will attempt to get the reversal. Monthly chart, I know it's early to be talking about the monthly chart, but I think there's an interesting thing about the monthly chart. Okay, right now the month is about 25 points tall. Let's say it does not get any bigger, and then next month dips below this month's low. That would satisfy the minimum objective of the bears. They want a pullback. 12 months without a pullback, they want a pullback. So they want the month to fall below the prior month's low. If this month remains a small bar, a 40 or 50 point tall month, right now it's about 30 points tall. And if November goes below the low of this month, that satisfies the minimum target objective of the bears. They're looking for a pullback. There has not been a pullback in 12 months, which is unusual. It's only happened once in the past 50 years. And the last time it happened, the bears got a 1-bar pullback. 1 month went below the low of the prior month, the bulls came in, and then the market went higher. And that's possible here as well. November, if October stays small, November can drop a little bit below it, and then the bull trend can resume. But I still think it's unlikely because the weekly chart is also extremely overbought. It has not touched its moving average in about 47 weeks. It got close here, but did not touch. Good question. Are you still short the market with your puts? I am. And I added on last week. And if we go up another 20 points from here, I'll probably add on higher as well. But I've been doing some juggling. So that means I've been doing some day trading to try to increase my chances of making money. So I buy a little bit more when it goes up. I sell out when it goes down. Sometimes buy calls on sell-offs. So I'm starting to micromanage, which I don't like to do, but the breakout was so strong, I want to increase my chances of making money. But yes, I'm still holding puts. Okay, a question about a screencast. I'm going to turn the screen off for a second so I can take a look at the screencast. No, it's not letting me copy the link. Let me try to type it in. It's probably not a good idea to give me links to screencasts because everyone listening gets bored, as I'm here trying to type a link. I'll give it one try, see if okay. So I don't know if this will show up or not, but anyway, the question, Alan, the 60-minute chart, we broke out of an uptrending channel, bull channel, went up for 5 bars, came back to the channel, and then double topped and now are below the channel. Please see the screencast. Does this not constitute a good top, or do we need a retest and maybe a huge tail on the top of a bar for it to be a good topping pattern? So he's basically simply showing the 60-minute chart, and he has channel lines drawn in. And he's basically asking, is this a major trend reversal? I had the lines drawn in, and he's saying we broke above the top of the channel, reversed down within about 5 bars, and now we're breaking below the bottom of the channel. Is this enough bars for a lower high major trend reversal? I think I've mentioned that. We have 4 bars down, 4 or 5 bars up. Now we have a total of, maybe 15 bars down. So that's enough selling pressure. This is not, I think, enough for a major reversal. 4 bars down, 6 bars up. Usually that a reversal from that is minor, which means more trading range. But now we've had 15 bars down. So if we reverse up for 10 bars or so, then the bears would have a better chance at a major reversal. But when a pattern does not have very many bars in the legs, usually the reversal down is minor, especially when the trend leading up to the trading range is very tight like that. So I think the odds of this being a major top are small. I think any reversal when the trend is this tight is going to be minor. So every reversal is a bull flag or a trading range. This reversal is leading to a trading range. We've had a couple legs down, and to complete the range, the market needs more up. If you just look at this and ask, is that a major top? Probably not. It's only, 3 bar pullback. And that's usually not enough selling pressure for traders to be confident that the bears can take control. And therefore, if we get a test of the high and then a reversal down, that reversal down will probably be minor, which means a leg in a trading range. And that means this is probably a leg in a trading range. And that means this is probably about as good as the bears can get without a better top. Question, since the anticipated correction in the S&P is likely shallower than many traders anticipate, I plan to scale into my S&P call options. Is this a sound strategy? Okay. I have one comment about that. Okay. The one thing that the NFA hates anybody doing is addressing an individual question about trade management. So if someone says, Al, should I buy calls in the essence in the spider, I can never say, right? It's the one thing, because if I say that, the NFA says I am effectively managing somebody else's money, and then I have to register and I have to be subject to audits, which I don't want to do. However, I can speak about a bull trend in general, and for example, let me pick a different market. Let me pick up the euro. Here's the euro futures market, and we put up a weekly chart. Okay, so if I see a trend like this, and I see a reversal, and the channel is very tight, chances are the reversal is minor. that means the odds are the market's going to test back up to the high. So if this were a stock, for example, and you ask me what I would be doing at this point, I would be looking to buy calls and possibly scale in, because the reversal is minor, which means we'd probably have to test back up to this area. So as long as there was enough room between here and there so that it's worth buying calls, that's what I would do. I would not be selling puts and not buying puts down here, and I would not be going short down here because the reversal is probably minor. And I think that's true of a lot of stocks, the stock market overall. Bank of America, traders were buying calls even though the market sold off because the channel is very tight. This is the weekly chart, right? When you have a very tight channel and you get a reversal down, the first reversal down usually is going to be minor, and therefore traders bet against it. NVIDIA, several months ago on the daily chart. Let's just take this one. Is this a major top? Can you argue it's a wedge? Well, it might be, but this has a lot of bars up, and that's enough to make me think we're going to get a test back up to the high. So is it a good top? I don't think so. It's probably a minor reversal, which means the market probably has to get back up here, and therefore it makes more sense, I think, if you see the market down here, start to buy calls or call spreads, expecting it to test back up there. So I'm not answering the question the way you want me to answer it, but I'm trying to answer it as best as I can without violating NFA rules. So if I think a reversal is minor, then I think the bull trend is going to go back up to the high. And if we're getting a reversal down, therefore, I'm looking to buy calls, buy the market outright. And that's true in the E-mini right now. This is the daily chart, very strong rally. Probably, if we do get a reversal over the next few days, this is the best the bears will get, and therefore traders will be buying. They'll be buying the E-mini, they'll be buying the stocks, they'll be buying calls, they'll be buying anything they can, expecting that the first reversal will be minor, even if it is fairly sharp. Even if it's fairly sharp like that, we're probably going back up to the high. So as long as there's room between their buy and the high, then the math, I think, is good for the bulls. I just realized that my screen was off when I was showing all that stuff. Let me go back to the NVIDIA for a second just to quickly go over what I was saying. No, it's not NVIDIA. Where's it? No, just here. So this is what I was talking about over here. Okay. A big outside down bar. Is that going to be a major reversal or a minor reversal? We have 10 bull bars. You can argue parabolic wedge, 1, 2, 3, but 10 bull bars like that, the reversal is probably minor. So if I see a pullback and I'm deciding, should I buy puts betting on a major reversal down, or should I buy calls betting that the reversal is minor and that we're going to test up here? I'm going to buy calls betting the reversal is minor. And I also talked a little bit about the Euro futures market, very tight bull channel. So we're reversing down. Is this a major reversal that's going to lead to a big swing down, or is it more likely a minor reversal, which will probably end before long and test back up? It's probably a minor reversal when the channel is that tight, and therefore it makes sense to be looking after. If you're expecting a minor reversal, if you're expecting that a reversal is minor and you see the reversal taking place, usually it's better to look to buy calls, betting that the reversal will soon end and the bull trend will resume, than it is to buy puts, betting that the reversal will become major. E-mini or Spider monthly chart, same way. When I see a chart look like this, if we pull back for 2 or 3 bars, is it better to buy puts, betting that it's a major reversal, or is it better to buy calls, betting that the reversal is minor and that will test back up to this high? It's better to buy calls. So if we start to pull back 1, 2, 3 months, I think if I were forced to do something, I would be buying calls, looking for a test back up to the high, because 12 bars without a pullback, the odds are, if we get a reversal, it'll be minor. A monthly chart, 2 or 3 bar pullback could be 200 points. So it could be a disaster on the daily chart, but on the monthly chart, it would simply be a bull flag. Okay, hope everybody has a good night.